This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The U.S. Energy Information Administration, EIA, on Tuesday predicted that domestic oil production will grow by 260,000 barrels per day, BPD, in 2024, up 90,000 barrels per day, BPD, from its previous forecast, but said estimated production cuts from OPEC Plus will still slow global oil growth. U.S. crude oil production will rise to 13.19 million barrels per day, BPD, this year, the EIA said in its short-term energy outlook. It had previously projected that crude production would rise this year by 170,000 barrels of oil per day. U.S. crude oil output reached a record 13.3 million barrels of oil per day in December 2023, following sustained productivity increases at new wells. Production notched an annual record of 13.21 million barrels of oil per day in 2023.
OPEC on Tuesday stuck to its forecast for relatively strong growth in global oil demand in 2024 and 2025, and further raised its economic growth forecast for this year, saying there was more room for improvement. The OPEC said in a monthly report that world oil demand will rise by 2.25 million barrels per day, BPD, in 2024 and by 1.85 million barrels of oil per day in 2025. Both forecasts were unchanged from last month. A further boost to economic growth could give additional tailwind to oil demand. OPEC's 2024 growth forecast is already higher than that of the International Energy Agency, IEA, and the two are further apart than they have been for at least 16 years in the demand views.
Moving on to the top news in the energy sector.
China is falling short on key targets for tackling climate warming emissions, and analysts said Beijing's credibility in global climate talks could be at risk unless it redoubles its efforts to get back on track. The Chinese government has rarely missed targets in the past, but now, driven primarily by energy security concerns, it has shown little political will to address the emissions gap, analysts said. China's National Development and Reform Commission, a planning agency, promised last week to redouble efforts in energy conservation and carbon reduction, this year after it fell short of expectations in 2023.
U.S. natural gas production will decline in 2024 while demand will rise to a record high, the U.S. Energy Information Administration, EIA, said in its short-term energy outlook on Tuesday. EIA projected dry gas production will ease from a record 103.79 billion cubic feet per day, BCFD, in 2023 to 103.35 BCFD in 2024 as several producers reduced their drilling activities after prices fell to a 3-1/2-year low in February. In 2025, EIA projected output would rise to 104.43 BCFD. Next, we have the top news in metal markets. Aluminium prices climbed on Tuesday to near 6-week highs as the market factored in seasonally stronger demand, but ample supplies from top producer China are likely to cap gains. A firmer U.S. currency after inflation data above consensus also added pressure to industrial metals. This makes dollar-priced commodities more expensive for holders of other currencies, limiting demand. 3-month aluminium on the London Metal Exchange touched $2,270 per metric ton, the highest since February 1st. It last traded 0.1% up at $2,260.50 as at 17:10 GMT.
More global copper smelters were not operating in the first 2 months of the year than in the same period last year, mainly because of Chinese inactivity, data from satellite surveillance of metal processing plants showed. EarthEye, which specializes in observational data, tracks smelters representing up to 90% of global production for its Savant service and sells data to fund managers, traders and miners. The company said that an average of 11.5% of copper smelter capacity monitored was inactive during January and February, compared with 8.6% in the same period last year.
We will now look at the top news in the agricultural sector.
Indian wheat inventories held in government warehouses dropped to 9.7 million metric tons, the lowest since 2017, after 2 straight years of low crops prompted the state to sell record volumes to boost domestic supplies and lower local prices. Wheat reserves in state stores totaled 9.7 million tons at the start of this month, down from 11.7 million tons in March 2022, the state-run Food Corporation of India said. Despite the tight supply, the government has resisted calls to encourage imports by cutting or removing the current 40% tax, or by directly buying from top suppliers such as Russia.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.